Hey guys, good evening. It's Cousin Vinny coming to you on the 7th of August with an update, midweek update. I think this one's pretty important because of some things that I'm noticing, things that I've read, and some things I'll share with you. First off, the ES, we know that we traded up to this upper trend line, okay, and tested it today. We previously had this trend that we broke above last week. Okay, and we still have this pattern that we're dealing with. Now, throwing the fibs on here, we talked about these levels at the 127 extension, which we're really getting close to. And of course, the March highs that we saw here that we're getting closer and closer to as we touch this upper trend line. Looking at the 10-year TNX, we can see that we've, after 4 months of a downtrend, we've broken above the 50-period EMA for the first time since April. And at the same time, TLT, the 20-year, is falling below its 50-period. We talked about that in the room today, okay? Which is a substantial thing. You can see Bollinger Bands are starting to expand as well. So we had a bit of a doji here, but we fell below the 50-period. So obviously prices and yields move in opposite directions, and it's this change is directly related to falling bond prices in Europe's weaker economies, like Italy and Spain. That was pointed out by John Murphy over at Stock Charts. And when the money goes there, it usually comes out of TNX and TLT. Okay, so more optimism in Europe is also pushing some funds back into global stocks. So money moving into stocks usually comes out of bonds. So today's upturn in bond yields and drop in bond prices is a sign of global optimism, which we're starting to feel and starting to hear on the tape. And of course, that's helping stocks and commodities. And it's also helping risk-on currencies like the Australian and Canadian dollars, and hurting risk-off currencies like the US dollar and the Japanese yen. You can see all that action happening during the day. So all these things are interrelated. So conversely, we also have to keep an eye on XEU, the euro, which touched the 50-day, briefly traded above it, and closed slightly below it today. So keep an eye on the euro. And also keep in mind this is a 3-month change, all right, since April. We've been in this downtrend, and we had a nice base. Look, we're putting in an inverted head and shoulders, and we're trading higher. All right, so that's significant. Look at stochastics and MACD. You can see the momentum has definitely changed to the upside. So with the euro moving higher, one also expects, as we saw and talked about in the room the last 2 days, the dollar continues to move lower. We've lost the 50 period here. I've been pointing out that this is a possible head and shoulders top. Okay, we could see another bounce back up to 83.65 area, and then move lower to the 200 period here. Relative strength is moving lower, and as one would expect, the MACD is rolled over and is moving through the zero line. Another thing, money is flowing back into commodity currencies like the Aussie and the Canadian dollars and out of the safe haven yen. This chart shows that the Aussie dollar Japanese yen cross is at a 3-month high, and that's a reflection of the risk on trade. We had a nice break here of these highs, and now we're moving to new highs with the relative strength pointing higher and the MACD and stochastics. Okay, moving over to the Canadian dollar, we can see that we're at a 3-month high. Relative strength is moving higher. Okay, we're well above our 200 period and also the 20 and the 50. Okay, so the Canadian dollar is looking really nice. It looks like it's forming a double bottom, W shape, or a cup and handle. Looks like it's building the right side of a cup now. And as we all know, a stronger Canadian dollar is a reflection of better prices on commodities and an improving trend on same. Also note the Canadian iShares ETF, AWC, is doing quite well. It's above its 200 period as well. It just peaked above that for the first time in 3 months. Okay. And also, you have to look overseas to the across the pond, and noting that the Vanguard VEU fund is looking very good. It's above the 300 period and the 200 period. It's trading at 3 and 4 month highs, and it's a reflection of things starting to look a little bit better over in the Eurozone. And we need Europe to be to get its act together to stop weighing down on U.S. stocks as well. So circling back to the S&P 500, using this as a benchmark, obviously we're reaching highs that we haven't seen since March and April and May of this year. And we're forming this nice cup. Relative strength is moving higher. We did back off a little bit today. And MACD is still trending higher, as well as stochastics. The thing I wanted to point out was the mid-cap stocks, S&P is catching up with its bigger brethren. Okay, it's not quite gotten as far as the S&P did, but it's approaching highs that it put in July. Okay, so we can see some improvement here, as well as on the small cap SML. So the small cap is also in the same predicament. We have this downtrending highs here that we broke above. We're above the 20, the 50, and the 200. So things look pretty good for the S&P 600 small cap index. Okay. Lastly, the Russell, similar to the S&P 600 small cap, we can see we've broken that trend line that connects these highs. Okay, and we're definitely trending higher, playing catch up. Relative strength is moving higher, and we've got stochastics still in a range that we can continue to move higher, and a MACD cross at the 0 line. So this is all looking pretty good. Also note the ADX cross here, a buy signal. Keep in mind all of the things I just pointed out, because this is an important update in my opinion. It's starting to show a lot more optimism. Of course, we heard news from one of the Fed officials that he felt that he would fight for more QE if need be, that he feels like the U.S. stock market is still treading water. Okay, and a few other comments that they made, but I think the markets are already starting to see more optimism. You're starting to see cash flows moving out of bonds into various other sectors, risk on trade with the Aussie dollar and so forth that I mentioned. So keep an eye on these things. I do see the ES backing off a little bit, possibly, maybe flagging here. Okay, and then moving higher to the 127 and possibly the 1618 extension. That's entirely possible that we break out of this, but I would expect that this would form a cup here and a handle and then move higher. Okay, so that's what I'm looking at. I hope this helps your trading for the rest of the week and next week. Remember to use your stops, and we'll talk to you in the room. Take care.